What we found was that the dividend payout ratios for the Australian companies have been climbing for the last 4 years, but that is driven by two things. One is we believe that the investors have become more risk averse relative to 5-6 years ago, and so they are rewarding management more today for returning capital to the shareholders rather than reinvesting it in their business. So in some ways, the incentive for the management is to give some of that money back. And the other is that the management are facing headwinds in growth opportunities due to the low commodity prices. It's very difficult to justify putting in new iron ore or coal mines. And then you combine that with an uncompetitive Australian environment in terms of low productivity, high labor costs and high energy costs or increasing energy costs. That's making it more difficult to find profitable growth opportunities here. And that leaves going abroad, but we have not had much experience in international acquisitions. So all in all, there's a whole set of headwinds here that's coming in the way of growing our economy.
Now let's pick apart the dividend idea.
Yeah.
I mean, how dangerous is it that companies are paying out so much in dividends and they are not pursuing top line growth?
In the short term, that's doable. In the long term, it's dangerous in the sense that it's very difficult to grow dividends if you're not investing for growth. And at some point, investors will be dissatisfied or their expectations will not be met. And the valuations that we are seeing today in the stock market and the equities market will have to recalibrate. And that's the big danger that the companies and the investors face.
What did your report find in terms of the importance of a growth strategy in terms of delivering ongoing total shareholder returns?
The main finding was that contrary to popular belief that acquisitions don't pay off or acquisitions are value destroying, we found that actually the companies that had figured out how to make acquisitions continuously, so to speak, or what we call serial acquirers, that they had returned the best returns, the best total shareholder returns over the last 10 years.
So if you're looking for shareholder return, you really want to go for those companies which do a lot of smaller acquisitions rather than the one which goes for the big bet and buys a one-off huge deal.
Everything else being equal, that's absolutely right. And but there are companies that have made relatively larger bets, but they again continuously do them. And of course, the goal here is to be able to not only find such opportunities in one's backyard, but also to have the ambition and the investors on board to say, yes, it's all right to go abroad to do that.
And when you look further across the region, do you think that Australian companies should be much more involved in M&A in Asia or even in Europe or the US?
I definitely think that we do need to do a lot more abroad. Absolutely, across the board. We've become very insular in that respect, and Asia represents a great opportunity. And I would agree, I would be the first to agree that the returns in the Asian markets are not as high as they are in Australian markets. But nevertheless, if you can embark on a strategy that is, you're consistent and you consistently pursue it, you should be able to create value even in Asia, where there's so many growth opportunities across the board. Then US is growing at a pretty hefty clip now, and it is resurgence of manufacturing there and so on. And it's difficult to be a global company without having a presence in the US. And again, it's not the first acquisition that necessarily creates all the value. It is a track record that you have to build.
When you look at opportunities for Australian companies overseas, what Australian companies or companies from what sector do you think are the best place to actually go and do that international expansion?
I think virtually all of them, but I'll tick them off. I would say that the healthcare companies have demonstrated very well that they can grow abroad, and there are a number of them doing so. So we can put that on the side. I think telecommunications offers a great opportunity to go abroad. I think the financial services business is the one that has been the most shy of going abroad. And they need to figure out how to take their talent, and they have lots of good talent. They create lots of value here. And how do you take that and create value in parts of Asia and possibly other parts of the world like Latin America and so on?
I guess the other big question though becomes when we go back to our original conceit, which is that the obsession with dividends means a lot of Australian companies don't pursue spending for growth. That's going to be the case for a while though, right? Because if you look at the demographic bulge that we have, the majority of investors are looking for yield and looking for dividend payments. They're not looking for capital gains in the same way as they did. I mean, how long do you think that's likely to go on in Australia? Is it just because rates are so low, or do you think it is actually the psychology of investors who are looking at their retirements rather than going for that growth phase of their investment portfolio?
I think the bigger driver here is the interest rates are so low. And that's the whole idea behind having such low interest rates, is that you hope that companies and investors would then take their money and put it into more risky environments, and that hasn't happened. And so my intuition is that as interest rates go back up at some point, as the economies get healthier and start growing, that you will find that investors are willing to take more risk. And I don't think we have to wait long for that. Yes, it is true that there's a portion of the population that is, retiring or nearing retiring, and they will want their dividends and their fixed income. But there's a much larger percentage of the superannuation funds and so on that will need to be deployed against the growth opportunities.
Thank you very much.
Pleasure.